Steamians, what's up? Dan at Starlight here. Thought I'd do a quick video just talking about some of the mistakes that I've made trading cryptocurrencies over the last year. Now, I'm not a professional trader. This is definitely not investment advice, but these are just some of the things that I've learned through trial and error. Hopefully you can learn from them without making the same mistakes. I probably heard these things before making them, but still had to learn them the hard way. Thankfully, it wasn't too much of a hard way because cryptocurrencies have still been rocketing this year. But the gist of it is, when I got into cryptocurrencies about a year and a half ago, I opened up sort of my own little portfolio, right? And if I had just stuck with that portfolio rather than making a whole bunch of good trading moves, and by good I mean they seemed like good moves at the time, but it turns out that in hindsight, if I just held onto that initial portfolio, it'd be worth a lot more than my current portfolio is right now. Thankfully, cryptocurrencies have been soaring, and you can make a lot of mistakes and still make a ton of money trading right now. Who knows how long that will last? I don't know. So I thought of 3 mistakes that are pretty obvious that I've made. The first one is trading for more dollars rather than for more of the cryptocurrency that I want. So it's a little bit of a mind game when you get into trading cryptos, because if you think of trading stocks or something, it's obvious you want to go into the stock and sell it for more dollars, right? But when you get into trading cryptos, it's like, oh, do I want more dollars, or do I want more Bitcoin, or do I want more Dash? So you keep flipping around because you'll make a trade that got you more dollars, but then you'll see the currency go up and you'll buy back in at some point and you'll actually have less of that cryptocurrency than you had before. So even though you made a good trade into dollars, you made a bad trade as far as crypto goes. So that's just the thing. I think you need to decide one way or the other and then just stick with it. Because if you're flopping back and forth, it's just literally screws with your mind. So you have to decide, okay, am I trading because I want more dollars, or am I trading because I want more of a specific cryptocurrency, whether it's Bitcoin, Dash, Steam, Monero? Do you want more of that long term? And honestly, I recommend that. I think if you just focus on trading for more of the cryptocurrencies that you really believe in, I think that will make you happier in the long term. So that's the first mistake I made. The second one is leaving coins on exchanges. Now, everybody talks about this, but granted, all of us probably have a few coins somewhere on an exchange, probably of a cryptocurrency that we don't know how to store any other way. So one of the downsides to investing in a crypto that you don't know or want to take the time to figure out how to store is that you're likely to sell it when fear happens within that exchange. And that's probably not going to be at the best point that you want to sell it, right? I mean, I had some Bitcoin during the Bitfinex hack. Now, thankfully, I got most of that back. But the thing is, during that time, I was afraid of exchanges, and I sold all of my coins on Poloniex for not necessarily a profit. I mean, I think for a little bit of a profit. I don't think I took too many losses there, but nevertheless, I fear sold because of the exchanges and because of thinking, oh, what if exchanges get hacked? Now, that is very likely, right? So that's a good thing to keep in mind. Exchanges do get hacked all the time, and it's risky to leave your coins on them. But even if you want to take a chance with a little bit of a coin and just leave it on an exchange, well, a lot of the time, that a coin will eventually increase in value. And all of a sudden you thought you had, $300 on an exchange. All of a sudden now you got a couple thousand, and you're going to start wanting to sell that coin because of fear of an exchange being hacked, or the exchange could just get hacked. So I say, figure out the coins that you can keep in cold storage, or keep more safe, maybe even just in a Jack's wallet or something. It's probably more safe than an exchange by far. And then that sort of leads to the last point, which is invest in coins that you really believe in. Because what happens, I've realized, when I threw money at a coin that I heard people talking about but didn't necessarily believe in long term, what happened is every time that happened, I ended up fear selling that coin when it went down, because I thought, oh, well, this could really go to zero. But when a coin that I really believe in goes down, I can just wait it out, because I'm like, I know this coin's going to be up in the future. So the thing about coins with bad fundamentals, or coins that you don't really believe in, one is you're not as likely to keep them off of an exchange, I found, at least in my own opinion or experience. And then second is I'm much more likely to fear sell them when those coins are dropping. Whereas most of the time what happens with cryptos is if you buy a coin and it goes down, so far it seems that if you just hold long enough, eventually you'll be back in the profit. But it takes balls to hold when your coin's going down, especially if you don't believe in the fundamentals. So buy coins that you believe in, keep them off of exchanges, and make trades to get more of that coin, not to get more US dollars. Anyways, those are some of the mistakes I've made. That's my advice for you today. Take it for what it's worth. Dan at Starlight. Peace out.